Good afternoon, everybody. Thank you all for taking the time out of your day today to attend the second of our two-part series of webinars featuring accountancy and business advisory firm BDO. Today, we're focusing on the upcoming changes to Making Tax Digital for VAT. So my name's Ryan Harris, and many of you will know me as your account manager at NoBlue. Today, I'm delighted to be joined by Amit Dev. He's a tax technology lead specializing in indirect tax at BDO. So if anyone has any questions during the webinar, please use the chat option provided. We will answer all of your questions in the Q&A later in the session. So I'll now hand you over to Amit, who'll take you through his presentation.
Thanks, Ryan, and hello, everyone. Thanks for joining. So as Ryan said, I'm Amit Dev, tax technology lead at BDO in the Midlands. So BDO, if you don't know, is a top 5 accountancy firm, and obviously we do accountancy-based stuff, so audit and tax as well, and other advisory professional services type stuff as well. So today we're going to talk about making tax digital. This has been my life for the past 2 years, really, helping clients get compliant with the new rules. And so what we're going to do is, if I move to the agenda and hide my camera for a second, hopefully you can see more of the slides now. So today we're going to talk about MTD for VAT, where we are at the moment. So give you a bit of an update on why it came about and where we are in terms of the timeline. Briefly go through some of the requirements in phase 1, and then go into more detail about phase 2, which is the digital links part of making tax digital, the harder bit, so to speak, and then touch on the future and where we think HMRC are going to go with making tax digital for VAT. So in terms of an update, it all started off a few years ago, if you cast your mind back, and as of 2018, HMRC stated that there's about £8.5 billion worth of avoidable errors, and that's just what HMRC were describing as transposition errors, where you're just typing in your box 1 to 9 figures on their portal or within spreadsheets, for example. It's not clear how they got to 8.5 billion, because it sounds like a lot, but that's the number they're using, and they're still using it today. So in terms of the original vision for HMRC in terms of making tax digital for VAT was real-time reporting. So real-time reporting of your VAT data, so sales and purchases. But as we all know, now that MTD for VAT has gone live and has been with us for a year or so now, it's quite far from the original vision, really. It's quite a few steps to go to get to that real-time reporting. And since the introduction in 2019, over 1.4 million businesses have signed up for making tax digital, and 6 million returns have been submitted. So HMRC obviously see that as a success. They're seeing their platform being used, hasn't really seen any downtime, which has been to HMRC's credit. In the main, that is. I know there has been some outages, a couple of days here and there, but in the main, it's been quite robust and has held itself. So where are we in terms of the timeline? So 1st of April 2019 was the very first go live date. But can you remember there was kind of 2 groups, really, in terms of go live? So there was the non-deferred, and then there was deferred. So in terms of the non-deferred, those were kind of straightforward businesses from a VAT perspective. So those that have a single VAT registration, that are not charitable organisations, for example, they went live from 1st of April 2019. And then in October that year, that's when everyone kind of went live, including the deferred VAT registrations. And then on the 29th of February 2020, that's when the first MTD for VAT deferred filing commenced. And then, of course, there was a bit of a gap, which we are in right now due to the pandemic. HMRC delayed any further rollout of making tax digital to 31st of March 2021 next year, which is essentially the digital links deadline. So that's where we are at the moment. So let's go on to some of the requirements. So I want to keep this high level because a lot of it you probably know already, but we'll kind of do a bit of a deeper dive on the phase 2 bit. So in terms of phase 1, there were kind of 2 requirements. So there was this digital record keeping requirement, and then this requirement to file your VAT returns to HMRC differently to what you were doing before. So before, kind of mentioned already, you were logging on to HMRC's VAT portal and typing in your box 1 to 9 figures. From 1st of April and from 1st of October 2019, that was changed. The digital platform was launched by HMRC, and businesses, depending on their go live dates, had to, from that point onwards, file their VAT returns via some software that was able to connect to the new digital platform, and those businesses have continued to do that. In terms of digital record keeping requirements, this is in law and has you know is enforceable from day one, really, from 1st of April 2019. But I'm not sure a lot of businesses were aware of it or still are aware of it, really. But hopefully most will be compliant anyway, because all it was is formalization of what many businesses were doing before. So in terms of digital record keeping requirements, businesses had to make sure that their box 6 figure was accurate from a time of supply perspective. So box 6 is the net sales figure on the VAT return. So from a time of supply perspective and a VAT rate perspective, and you know, which most businesses should hopefully be compliant with anyway before making tax digital, and obviously now with making tax digital for VAT gone live. But in terms of another requirement, businesses also had to make sure that their box 6 figure was accurate, and they could split it between the different VAT rates. So they had to have what's called a box 6 split. Again, assuming that tax codes, for example, have been applied correctly in NetSuite, then that should be quite easy to produce, sorry. So that's the kind of phase 1 requirements, you know, which has gone live already. So hopefully all of you are already compliant with that. In terms of phase 2, this is where we get the digital links aspect coming in. And again, because I think most of you are probably got NetSuite systems implemented already, or at least going through that process, you should be fully compliant, especially when NetSuite is your only system. You only need to start worrying about digital links where, for whatever reason, you're having to use a spreadsheet. Perhaps you've got a partial exemption calculation to do, or because you have multiple systems that kind of combine to form your core accounting in system or environment. So you could have, for example, e-commerce platform, or you could have a billing system that's separate, or maybe you have a P2P type procurement system which sits outside of NetSuite. And where you have that, you just need to start thinking about, if you haven't already, how data moves from one place to the other. So going into a bit more of a deeper dive on digital links. So here's a definition that HMRC have come up with for digital links. And if you want to check this out, it's paragraph 4.2.1 of notice 722. Now it's a bit dry, it's a bit boring, and after you've read it, and I'm not going to repeat what's on the slide, but after you've read it, you probably are none the wiser, because it doesn't really make much sense. So what we've done is just to break it down a bit. So what is really the definition of digital links? Well, like I said before, it's more about how data is moved around where you have multiple systems. So where you got one system, just NetSuite, for example, then you'll be fine. But if you're having to use separate software packages or systems, like I mentioned, billing systems, or maybe a spreadsheet for partial exemption purposes to do your calculation, then you need to start thinking about how data is transferred. So it's about how that data is transferred around different systems and different software packages. we have some university clients, for example, so this is quite important for them, and any other type of businesses really that have multiple subsidiaries, for example, that might be on different systems. So where you've got a corporate group or large corporate group that may have grown through acquisition, so naturally you'll have different systems, but you might have one back group, so one entity, so to speak, from a VAT perspective. So it's understanding how data transferred between subsidiaries. And then how that data is transferred from accounting software to a spreadsheet, because you might need to do, for example, a partial exemption calculation, or maybe for some other type of consolidation exercise that you're having to do. So that's what it's concerned with really, digital links, is how is that data moving around, and what breaks. So where a digital link will be in place where you have an automatic link, for example, from a billing system to NetSuite, or even a download into Excel from your billing software, for example, and then upload into NetSuite. Even something like that, where you're not touching that output file stroke input file, where that's not being touched at all, no human intervention there, then that will probably be fine and will meet the digital links definition. But where you're manually typing in manually typing in figures into a spreadsheet, or you're copying and pasting information, so you might have an output file from a billing system, for example, and because it's not in the right format for NetSuite potentially, then you might need to change it around, or you might need to put it into an upload spreadsheet. When you're doing that and you're copying and pasting, that would break a digital link. So really what HMRC are trying to see, and the reason why they've got this digital links requirement, is they want to see a digital journey all the way from the first entry or first creation of a digital record, so be it a sales transaction or purchase transaction. So once you've made that entry into a system and create a digital record, when you transfer that record to another system, such as NetSuite or a spreadsheet, then you need to make sure it's in a digitally compliant manner. So like I said, straight download, upload without touching that Excel file, so to speak, or CSV file is fine. But when you start playing around with it, you need to think about, what you're doing. Are you making manual entries, or are you copying and pasting information? So that's a digital links definition. And as I said, hopefully most of you just have one system. So, you just have that NetSuite system and you're fine. But many of our clients at BDO are not in that kind of lucky sweet spot. Instead, they may have a system or a number of systems, because they may have maybe a large corporate group that have a number of subsidiaries with different systems. So they're actually having to use Excel a lot in order to consolidate information, and naturally, there'll be errors potentially that they need to correct as well. So from phase one, what they did, just to as a sticky plaster type of thing, is they had the magic happens bit, which is where they do all their kind of sorcery in Excel, so to speak, to get the consolidated figures corrected, and then any adjustments made there. And then they bought some quite simple, straightforward and cheap bridging software in order to meet the phase one requirements to file their box 1 to 9 figures straight to HMRC. So that was the digital journey. It wasn't really much of a digital journey. It was just the bridging software and HMRC servers where the digital journey was. And then it stopped. There was this black hole, so to speak, or black box even, of art going on in the background. So that's the phase one requirements. But in terms of phase two, this is where, if you do have multiple systems, or you're having to use spreadsheets for whatever reason, is where you need to start thinking about what you're actually doing, and is it compliant with phase two, and if not, what do you need to change? So many of our clients are in this position, or were, and are now compliant, in terms of making sure they either get a new system such as NetSuite to replace all of this kind of Excel-based processes, or they were able to come up with a different solution. So in terms of, you know, an example of what might be happening in some businesses where they're a bit more complex from a systems perspective because a lot is going on. Take this client, they've got a few stores, so they've got tills like EPOS systems in their stores. Then they've got accounting software that could be NetSuite, and hopefully, you know, your NetSuite systems, if you do have stores and tills, you know, are directly interfaced with the tills and EPOS systems. But some of our clients, that wasn't the case because their EPOS systems weren't EPOS systems, so to speak. So they weren't even, you know, tills weren't even electronic. Some of them were those old, you know, those Casio type tills, which are just really glorified calculators, to be honest, those cash registers. So, you know, there was no electronic link there to any accounting software. Perhaps you're in the same position, hopefully not. So there was something to think about there. And then, you know, once everything was in their accounting software, maybe NetSuite, is then how do they then go from there to HMRC in terms of preparing their box 1-to-9 figures? So obviously, you know, NetSuite is fully MTD for VAT compliant within that environment. So you need to think about it. Are you moving information outside of that environment? And if you are, that's where you need to think, you know, are you still MTD for VAT compliant? And if you are moving stuff out of NetSuite to do calculations, you know, why are you doing that? Do you need to continue doing that, or could potentially there be a you know, a solution, quite a simple solution in NetSuite by using some tax codes that you might not be already using? So in terms of this client, they're having to excuse me, output into Excel, and there's a reason for this client, because I know it only shows one accounting software there, but they actually had multiple accounting softwares running in parallel. So they had an output file for each one that they had to consolidate into one essentially. But because the subsidiaries were in different locations, they all reported, each subsidiary reported their VAT data to a group tax manager. So they emailed that to the group tax manager. The group tax manager then took those files and consolidated those by copy and pasting into a VAT return preparation document, which was then linked to some bridging software to then go to HMRC. So in terms of this, you know, it's understanding really, and if you haven't done this already, where you do have multiple systems or you're taking data out of NetSuite to calculate your box 1-to-9 figures for whatever reason, it's really important to do a systems diagram like this. Like I said, if it's all in NetSuite, then you're fine. But if you are working outside of that environment, then no matter how simple, or even, you know, especially if it's complex, it is, then you should really map this out just to see and pinpoint where a digital gap could be. So that's really the importance here. And in terms of this customer kind of VAT return preparation process, so what constitutes a digital link? So getting your information into Excel from NetSuite or some other type of accounting software, where you're just running a report and the software, the accounting system, will export that information into Excel for you. That still constitutes digital link, so that's fine, as long as those output files are not tampered with in any way. When I say tampered, what I mean is, you know, there's no manipulation in terms of reformatting even, or having to delete rows and so on, because maybe the information you've exported is not all of it's required. As long as you're not doing anything like that, then emailing that to, for example, a group tax manager or group finance manager, that's fine as well. That constitutes a digital link. And then what you need to think about is, what does that group finance manager do? You know, if they're copy and pasting, like I mentioned earlier, those output files that they've received via email into a VAT return preparation document, you really need to think about whether there's a different way of doing that, because copying and pasting, that's where your digital journey or your digital link is gonna break. You're gonna have a digital gap there. So it's then thinking about, can I do something differently here? You probably could. I mean, you probably do something in Excel, but that's probably not ideal in certain circumstances, the ideal solution would be having this all done in your accounting software, for example, NetSuite. So that's the kind of main phase 2 requirements in terms of making sure you have that digital journey, that unbroken digital journey. So in this example, an HMRC officer should be able to see a digital journey in terms of going from your till, so your EPOS system, recording that sale transaction, that feeding through to your NetSuite system, and then hopefully you won't need to do all the Excel steps in between. That then going straight to HMRC, because obviously if you've got NetSuite, then you won't need bridging software because that's fully compliant, and you can file your VAT return straight to HMRC. But for whatever reason, if you're having to use bridging software as well, perhaps because you're having to consolidate a number of different accounting software, then it's really thinking about really getting that clarity on, have you got any digital gaps, and if you do, can you bridge them? And once you've bridged them and you're still using Excel, then it's really important to get that process as controlled as possible. So making sure you lock down spreadsheets where you are using them, only using templates with pre-populated formulas, pivot tables, or ideally macros really to automate certain steps, just to make sure, if you think about back to that first or second slide where I mentioned the 8.5 billion tax cap, that's what HMRC are thinking about, and where we are going into a bit of an economic crisis from yesterday's announcement. So I can see Rishi, knocking on doors potentially, or asking HMRC to anyway, to try and pull back some of that gap that they have at the moment that they've calculated. So that's really what the digital links journey is about, and just summarizing, some of the things that you can do and you can't do. So in terms of do's, you can run a system generated report. That's fine. You can export reports from the system into Excel. Once you've run that report in the system, for example, in NetSuite, that's fine as well. And when I say Excel, it could be CSV. It could even be text file, as long as you're then able to import that into Excel if that's what you're having to use. If you are using Excel, because like I said, you're consolidating a number of different accounting systems, so you might have NetSuite, but you might have another one because you've got different subsidiaries, and you just don't have the time at the moment to get them all under one system before 1st of April 2021, then you can use what's called live connections to connect two separate Excel or CSV or even text files together. You can forward partially prepared VAT return files to other colleagues or even agents if your agents are preparing your VAT returns for you via email. So BDO obviously prepares a number of VAT returns for its clients, for its complex clients. And then making sure where you do have bridging software, you have a digital link between that software and any Excel spreadsheets you might be using, and for whatever reason you're using it for. So I have seen a number of clients that are still typing in to that bridging software, which goes against making tax digital, to be honest. So in terms of the don'ts, so like I said, no more manually typing into Excel spreadsheets. There is an exception for partial exemption. So with partial exemption calculation, so if you are partially exempt and you're having to do a partial exemption calculation in a spreadsheet, for example, by downloading some reports and then doing some calculation in spreadsheets, that's fine as long as you digitally link your adjustment figure either into your VAT return preparation spreadsheet or ideally into NetSuite via journal, for example, to then rerun your box 1 to 9 figures in NetSuite for then filing to HMRC. So doing that process is fine, but where you can do that, you can do some manual entries in that calculation because there is an exception. But from a general VAT compliance perspective, and if I was a HMRC officer looking at your calculations, I think I would be better assured of your compliance situation if there were at least, you know, some sort of template being used which had formulas already embedded in there, or even some sort of automation software that can automate partial exemption calculations. There's a number out there that you can use. So where you're using something like that, I think HMRC would be more comfortable if they were to review your processes. So I think it goes without saying, you can no longer print off VAT information and then post it to colleagues to then, you know, prepare their VAT returns in an Excel spreadsheet. You know, those days are gone now, and I'm sure the pandemic has stopped that anyway, but I'm sure there's still some businesses that still do that. And you can no longer utilize the old method of filing VAT returns where you're mandated to use Making Tax Digital for VAT, so where your turnover is above the VAT threshold of £85,000. So that's kind of the phase 1 and phase 2 requirements. Phase 2, like I said, goes live 1st of April 2021. So where you do have your digital gaps, you need to start thinking about making sure you identify those clearly, document those, and then looking to bridge those gaps. So what about the future? So what does the future hold for Making Tax Digital for VAT? The first question that I always get is there going to be another delay? Because obviously, because of the pandemic, there was already a delay. And the question has been raised several times, is there going to be another one? So, I mean, this is obviously speculation, but from what we've read, it doesn't seem like there's going to be an extension. So during the pandemic, on the 21st of July 2020, the Treasury confirmed that MTD won't be delayed. It will in fact be extended, and it has been extended to include VAT registrations below the VAT registrations with turnover below the £85,000 VAT registration threshold. So those businesses will need to comply from 2023 onwards, and also from 2022, Making Tax Digital will be extended to self-employed individuals and landlords, and that's individuals and landlords trading above £10,000. So I don't think, the short answer is I don't think MTD is going to be delayed again, because it's quite clear, if anything, it's been extended. And the reason why it's been extended is during the pandemic, the HMRC and the Treasury noticed that, you know, and they feel it's quite vital actually to boost national productivity and essentially to increase tax receipts, because internally within HMRC, there was a bit of resistance to Making Tax Digital, but and that was because many of the officers weren't really familiar with technology, so to speak. But because of the pandemic, they've all been forced now to utilize technology, obviously, such as Teams. So, you know, at BDO, we've had, you know, endless amount of Teams calls with HMRC officers directly, but also we've had what's called ADR meetings. So this is basically the step before you go to court, where your client goes to court against HMRC. It's the mediation step, really. So we've had several of those meetings over Teams, and it's worked really well. And, you know, credit to HMRC, the pandemic hit, and they've done really well to try and support businesses and to keep going, really functioning as the country's tax authority. So in terms of that, because all the officers essentially have had to adopt technology, I think they've seen it as a good thing now, as a positive step forward. So there's a lot more backing internally within HMRC to move Making Tax Digital for VAT forward. So with the pandemic, they've seen the need for flexibility, especially within the tax system, and they want a more responsive tax system. Because at the moment, as you probably can tell, it does take a bit of time to get some sort of feedback from HMRC. So hopefully going forwards with the digital platform, it'll be a lot more responsive. And HMRC want a bit more up-to-date information from businesses at the moment, especially corporate tax, which is kind of annually done unless you're within what's called QIPs. But within VAT, there's quarterly updates, which is a bit more frequent, but really they want it to be real time because, I mean, this might sound a bit revolutionary in the UK in terms of what HMRC are trying to achieve, but in Europe, this has been done for many years now. I mean, in Spain, for example, so we have clients obviously who span a number of jurisdictions from that perspective, and the Spanish tax authorities require a full list of purchase invoices, which they then reconcile to those produced by suppliers in terms of sales invoices to see whether your input VAT claim is correct. And if it doesn't reconcile, then they block an input VAT claim until the taxpayer can prove that the input VAT claim is valid. So that's what's happening in the continent at the moment, and it includes Poland as well, and Italy, and many other European countries. So that's in terms of what the future probably holds for Making Tax Digital. And also another reason why Making Tax Digital for VAT probably won't be delayed is HMRC have now opened up their consultation on MTD for VAT for corporate tax. So that's already gone live. The consultation period has commenced. It's a bit longer because of the pandemic, but you know, if you wanted to, if you go on their website, if you just Google Making Tax Digital for corporate tax, you'll see the documents for the consultation, and you can feed into that process if you want. There are quite a few valid questions in there. One of the requirements that they're proposing is to have more frequent updates for corporate tax, so to be in line with what you're having to do for VAT purposes, so have quarterly updates as opposed to just annual. And then going forward, once Making Tax Digital for corporate tax has been rolled out, who knows, maybe it'll be even more frequent updates. And in terms of the timing for Making Tax Digital for corporate tax, there isn't a defined date at the moment, but it does say that it will not be mandated before 2026. So there's plenty of time there. But what I can see happening potentially is the market responding a bit more proactively. So in Making Tax Digital, there was a bit of more of a kind of, you know, firefighting type action going on in terms of, you know, everyone just waiting for HMRC to put the requirements in, wondering whether it's going to happen or not, and then complying. Whereas with corporate tax, because I think most businesses are now going to be comfortable, if not happy, but at least comfortable and familiar with Making Tax Digital, and for corporate tax it'll be quite similar in terms of the platform. I think there'll be a bit more proactivity in terms of adopting that going forwards. So this is going to be my final slide now. In terms of the timeline going forwards, so we have a few dates in the diary. Obviously, the next kind of milestone is 31st of March 2021, which is the expiration of the soft landing period. So this is where, you know, you had a bit of time to comply with the digital links part of Making Tax Digital, which was extended because of the pandemic. And then in November, like I mentioned, the consultation on MTD for corporate taxes has landed. And then from 1st of April 2022, this is where all VAT registered businesses have to be compliant with MTD for VAT. I think I've got those two dates the wrong way around on the previous slide, but yeah, it's actually all VAT registered businesses that must comply with MTD for VAT from 1st of April 2022. So that's irrespective of the turnover amount for that business. And then for 6th of April 2023, this is where MTD for self-assessment goes live, and it's for income amounts above £10,000. In terms of beyond 2023, obviously we have Making Tax Digital for corporate tax from 2026 onwards. But in between that time, I mean, this is just speculation, but you can see HMRC up in the ante a bit, up in the tempo a bit in terms of wanting a bit more information. I don't know if you've seen it yourself, but in their guidance and in law, there is the ability for HMRC to ask for information through the platform. So there's this section called voluntary updates. It hasn't been turned on, but there is that ability, should HMRC wish to turn it on, for them to do that. There's also this facility for supplementary information. So again, this is more, I think, in line with our European counterparts, or their European counterparts in terms of tax authorities. So this is where they could potentially ask for purchase ledger transactions to reconcile that to input VAT claims. And then who knows, we might finally get to real-time reporting requirements. It probably won't be before 2026. I reckon HMRC, and again speculation here, I reckon HMRC will wait until the whole of MTD has been rolled out before they start going down the real-time reporting. So I don't think 31st of March 2021 is the end. It's probably just the beginning, really, of Making Tax Digital. And that's all I wanted to cover today. Hopefully that's been useful. And are there any questions?
Thanks very much, Amit. So yeah, as Amit's just said, this takes us on to the Q&A segment. We have a couple of questions that have come in already. If anyone has any further questions, however, please do just submit those now, and we'll cover as much as we can for you. So the first question for you is: are there any specific digital record keeping requirements that they need to consider?
Yeah, so this is the whole kind of box 6 split, and then there's the net back gross requirement as well, which should be, I mean, if they've got NetSuite, then this should already be covered. So this is making sure every sales transaction and every purchase transaction has a net back gross record being kept. And in terms of the box 6 figure, that needs to be accurate from a time of supply perspective and a VAT rate perspective. And it's a similar case for the box 7 figure as well.
Brilliant. Our second question is: are you aware of the requirements for Making Tax Digital for corporation tax?
Yeah, so I think I mentioned about the requirement for potential increased reporting for corporation tax. So potentially there could be a quarterly update required as opposed to just an annual update where you're outside the quips. But if you're within the quips, that's a bit different, isn't it? So that's one of the requirements. But in terms of the general digital links requirements and the record keeping requirements, that will probably mirror Making Tax Digital for VAT.
Fantastic. We haven't had any further questions submitted. So thanks everyone for taking the time out of your day to join our webinar. If you would like any further information or want to actually provide some feedback, please reach out to me at ryan.harris@noblue.co.uk. This webinar will be uploaded to our YouTube channel over the next couple of days as well. So if you'd like to review some of the slides or information that Amit's presented today, that facility will be available to you. So thanks again for taking the time. A big thank you to Amit for sharing his insights with us all into the upcoming changes. I look forward to speaking to you all in due course. I hope you have a great rest of the afternoon, and please do just get in touch if you need any assistance.